Okay, so thank you everyone for being here, for listening to this panel after a very long day of conferences and fun. So my name is Pavle Batuta. I come from Serbia. I represent a company called Moonstruck, and we are involved in the Everscale ecosystem as a Serbian partner. We are currently building the use stablecoin, which is one of the first, if not the first, algorithmic stablecoins that will be built on Everscale blockchain. And since we are already on the topic of CBDCs, I'm very interested to share a little bit in the discussion about how we can actually create currencies that exist on blockchains, either CBDCs, algorithmic stablecoins, or similar. So thank you all for listening. Who would like to go next? Maybe we do a little bit of a remix.
Oh, yeah, let's just work down the line for the introductions, then we'll mix it up.
Great. Good afternoon, everybody. Thank you for being here with us. Like Pavel said, right, it's been a long day of conference. My name is Zehan. I'm a Malaysian, but I'm now residing in the Middle East, Qatar, working for an insurance company. And I've been part of the community since the early days of the establishment. So it's always a pleasure and honor to be back and to be seeing everyone. So thank you.
Okay. My name is Bo. I'm from South Korea, representing Zangle. I'm a CBDO of Zangle. So Zangle it actually starts with X, not Z. So you should be careful of that. And then we work with governments and central banks and all the regulatory sectors to create better basement technology of Korean blockchain business. So we have a rating system here in Korean market, and then we're the sole rating solution in Korean market in terms of listing tokens. So because of that, I meet a lot of token projects, and then I talk about regulations, of course, Korean regulations and everything. So I hope I can share some information about this regulatory issue on CBDC. Thank you.
Hi, I'm David Police. I'm founder of ZBX Exchange in Malta, the smallest country in the European Union, for those who don't know where that is. We also, in the past, worked with some governments, like the Marshall Islands, when they tried to introduce their CBDC, and some others, so we have consulted. And we're also quite large within the iGaming, like online gambling space, as a family business, and also AI in general as businesses.
Hello, everyone. My name is Alexey Antonov. I'm an investment director of Algalon Capital. It's a hedge fund, and I'm here because I like to think that I understand a thing or two about central bank logic and financial markets. So.
Cool. Hello, everyone. My name is Sergey Jurinsky. I'm a co-founder and managing partner at DeFi hedge fund called Warp Capital, who is the initial member of Everscale DeFi Alliance and one of the largest liquidity providers to Everscale ecosystem. So I like CBDCs too, so that's my hobby to talk about it. Yeah.
Okay, well, a lot of interested and varied and deep experience. So obviously we're here to talk about CBDCs and look at where they are now and where they're going, and sort of where they fit alongside stablecoins. So if we start at the beginning, there's a lot of e-money out there anyway. So where does that fit exactly with digital currencies? Why is there a need for CBDCs, I guess is the question. So why don't we start just this one time, back at that end, and then work our way through so that we've set everybody's sort of initial opinions of the topic?
Mm-hmm. Well, I see the idea of CBDCs, which can be a little controversial when you look at it, in a sense that there is already money, and there's already digital forms, many digital forms of money out there. But an interesting perspective from like a tech point of view is that money is also data. So a good implementation of CBDC that sort of leans on existing blockchains and existing infrastructure can allow money to be treated as data in a better way. It will allow new models of financial applications, both in like Web3 space, where you would directly pull in like assets, from moneyed assets from accounts and banks and similar things. And it would also allow like the next wave of digitalization of existing financial applications. So the idea is a lot of fintech innovation is difficult and it's hampered by not just difficulty in like regulation, but also all of these siloed data provisioning and sources that come with banks and financial institutions. And a movement towards CBDCs could actually enable a very interoperable world of money, like worldwide, over time. So personally, I find this very exciting because it will allow like a cross-chain standardization of money tokens from different countries in a very sort of integrated way.
Okay. Zehan.
Well, no, I guess the technology has been studied by many central banks when it first started. And when they were looking at it before, I don't think they were really thinking of how CBDC would become a system where you would disrupt or you would replace existing infrastructures. But I think it came to a point in this time where now you have two different so-called categories of CBDCs, right? You have the retail side of the CBDCs, where the mass public would use, and the wholesale side, where they use it for international settlements. So I think more banks right now, including the ones in this region, Malaysia and Singapore, have explored doing CBDCs for international settlements, right? So I think, and they have all came together with multiple countries to explore and how that settlement works. So that's my view on how CBDC is. Yeah.
Okay. I'm going to use some use cases in Korea because we already have a lot of like digital payment system in Korea. For example, Samsung payment system is all like worldwide, like widely used in Korean market, and then every time we use it, we think about like Samsung being a monster, like seriously. Like when it comes to the reality, people always have to be emotional. I mean, like you can talk about technology and logic reasons, but when you choose to take it, it's always emotional. That's what I think. And when I talk to Korean people who are already using all the payment system, and then saying, like, asking them, like, why don't you use like blockchain system instead of like, using like Samsung Pay? And then they say, like, I don't know them. Mm-hmm. Is it like based? Is it backed up by the government, or can I believe them? So that's what I'm like. If CBDC comes out and then give people the trust, what the blockchain really is, then we can actually like scale it out. Well, of course we're going to discuss about like technology problem, and then there's the anonymity and everything. But like in terms of like giving the trust to the people, we can always use CBDC with government. And that's what I think. And then they're going to find out all the good reasons why we have to use it.
Look, let's break the problem down and focus. The difference between the e-money and the CBDC is the issuing layer. One is issued privately, the other one is issued by government.
Absolutely.
But you asked a specific question. Why do we need the CBDC? The thing is, who needs it? Does the government need it, or do we need it? I think it's more a question of, on a government level, if a government issues their own CBDC and doesn't adopt, say, for example, USDT, just to pick one of the many, they can program the CBDC, which gives them much more authoritarian powers. And people think, but they're not going to propose such. The Bank of England, recently, it was proposed within governance that one of the ministers addressed the House of Commons, says we should think about making a programmable British CBDC. So we're not far away.
Indeed, but Britcoin, as it's been dubbed.
Yes, I mean, they call it the Britcoin. If CBDCs are programmed, then for the government, there is much more chances of actually now playing with monetary and fiscal policy. You can go much deeper into negative interest rates. And I don't even want to go within the current geopolitical scenario, what's happening with regards to being able to confiscate money. And if you want to talk from an economic point of view, obviously you can incentivize people, not just by using monetary policy or fiscal, by putting money in the economy, but by making it also putting an expiration date. If you don't spend it by XYZ, it's going to expire. So you're really more pumping money into the economy. So the question really boils down to benefit for who? I can see a lot of benefits for the central government, for the central banks, but if you talk stablecoin versus CBDC, I can see the weight scale going more towards central banks rather than for individual users.
I think all of that is a topic that we're going to probably circle back round towards the end of our conversation, because you've hit on a number of very fundamental points there, I think. So.
Yeah, that's really interesting what you're talking about. Somebody called it fiscal terrorism now, because the government is trying to prevent you from taking a rent from your money, from collecting a yield. So that's really interesting. But for the audience to follow, I think we should explain that what CBDC is. You got three forms of money. You got paper cash, you got deposits on the bank account, and you got third form of money. It's a central bank digital currency. So where is the typo here? We can pretend that it's not. And with this third form of money, you can do plenty of interesting things, as good as bad, and different kinds. And it's not like you can compare it to stable coins, because stable coins is a digital currency which issued by some private company, and they try to peg it to fiat currency, like mostly dollar. And CBDC is just the new form of money for the government to achieve their goals, probably. So if you ask me what interesting I learned about CBDC recently is that if government benefits from it, people somehow benefits from it, because you can, send the money without internet, but it's digital money still. You can have more control. You can prevent some corruption schemes. So who lost in that new wave of money? It's regular banks, because they lost some liquidity they had before, and they should, do their job, score people, provide user interface, and the liquidity goes to central banks, which you access directly.
So I'll come back to you on a moment, specifically on that aspect, because that's sort of already leading us into the next question. But first of all, Sergey.
Yeah, I'll be short. Maybe intriguing thought, but CBDC just happened because there were already stable coins on the market, and people started using it. And if you are not following the best technology in the world, then suddenly your citizen will stop using your money, and that's the bad thing for the government, in my view. That's simple as it is.
Okay, so Alexei, coming back to your point, I think, what are the implications of that? So that you've said effectively the loser in all of that is the traditional banks. So what are the implications for those traditional banks and the knock-on effects to the users of the traditional banks and the markets that they have and the markets in general?
So everybody knows that banks use your money as they want, probably. They don't have all the collateral of all the deposits, obviously. So they use your funds from, I don't know, from the ancient Greek. then they, then you can use like local banker. They won't call at that time bankers, but you can deposit them money and you can lend them money. Then you deposit, they can't touch it. But centuries and centuries, they again and again touched that money. The government pushed them to provide free credits, and you all know that kind of stuff. Now, we have the circle go back again, and the banks are losing part of the business. If everyone will use CBDCs, which will be basically digits in central bank, so bank lost their liquidity and start to do the real job. And that's why in many countries, banks are at the opposite side of the discussion, of that particular discussion.
If I may, I think if we boil it down again, what will this create is a disintermediation of commercial banks. So right now, I give my bank 10 euros, and they can issue 80, 90, depends on how much the multiplier they are allowed. Once CBDC goes into effect, that will end, as far as I see it. Or at least there is nothing in place to allow commercial banks to keep on issuing more money, right? So in a way, you can say that commercial banks are going to face unfair competition from their own regulator because they cannot do what they can do nowadays. So that is, we're going to go into a situation where I think most of the smaller banks will be cut out of a lot of the business that they currently do. And probably some of the banking leaders out there, I don't know, JP in the US, SocGen in Europe, so on and so forth, will still have their share of the pie. But the small guys within the banking sector will probably suffer the grunt.
Any other comments, guys?
Well, a curious question, right? Back to the panelists is, would regulators want to get in that space, of competing with their local financial systems, the banks, or would they then issue, CBDCs to the banks, right? Like how it's traditionally done, right? Central bank prints money, distributes it to the bank, and charges a very low interest rate, and then the banks, so banks can't print money, by the way, yeah. And so then it gets distributed out, right? So I think
the problem with the CBDC is that once the central bank issues it, you cannot do a multiplier on it. I cannot reissue more currency. You cannot give me 10 euros and I give 90 as a loan because it is issued centrally. So there is a problem with the multiplier effect when it comes to the commercial banks. So right now, I haven't. Maybe there is a solution out there, but I have not heard it, as an economist out there, or maybe I haven't read enough about it. But that is a problem that no one has, I think, addressed so far.
Interesting point. Back to you. Sorry, Calvin.
Anybody else on that one?
Well, the interesting thing is, if CBDCs come into effect, then not only banks lose on the idea that we've already seen and heard here, which is basically you no longer require deposit-based money, but also if there is proper access to this CBDC ledger, then anybody can be a bank, right? That's the whole original idea of crypto, that be your own bank. But this is very much dependent on the implementation of the ledger and the way it will be handled. And I think this will differ from region to region, from country to country. But in practice, nothing stops a DAO from being a very good bank, like issuing loans very effectively. So in that sense, there is a big wave of disruption of banking in general. That's possible. But I also worry that a lot of that energy will be hampered by regulation because banks have a big seat at the table and they will probably push back against it pretty hard. So we might actually see a model in which you will not be able to access your currency without a bank account, even though you actually don't need it. So that's the way I see it right now. Essentially, there is disruption, but also banks have a seat at the table, and it's going to be a long fight to bring a more efficient system with less intermediaries.
Okay, so do you see central banks getting involved in this space because of recognition that that's the way the world is going, that money is no longer going to be paper-based, it's going to be digital, and they've got to go ahead even though they maybe were reluctant to begin with? Do you see them doing it because they want to be involved? Do you see them doing it because it's a defensive move? Do you see them doing it because of the sort of the benefits they can see, or the flip side of that, the drawbacks if they don't? And this sort of comes back to the points you were making, Dave. What exactly are the benefits and the drawbacks to the government? If we focus on that part, why is a government, why is a central bank going to be wanting to issue effectively stable coins? Okay, slightly different definitions. It's a stable coin in that it is the country currency, such as the dollar or whatever, instead of having a private stable coin that's pegged. So what are the reasons that the central banks are going to be wanting to do this?
So it's obviously it's better accounting, better control. Creating probably it's really depends on a particular government creating new smart contracts using all that technology stuff. Unfortunately, it really depends on particular government and we needs and we will, because in this century they try to cut unnecessary freedom, financial freedom. The more we live, the more KYC, AML procedures we have. This thing you can, this thing you cannot, and it's more and more complicated, more and more. There is a bright side of it also. You can do interconnection, international payments. You can, let's say we live in some country which not really, which doesn't have its dollar, and they issue their own CBDC, and everyone in the world with the mobile phone can use it. And that's a really benefit for its country because it's expand their local currency, like expand the region. They can print some money and everyone can use it. That's every government wants. With CBDC, you can extend, you can tell dollar, we don't need you, we have this, we have this, we have this, and in every mobile phone you can change one currency to another. That's a bright side, but all other things, I agree with you. It's more control.
Yeah, I do find a problem with CBDCs or central governments if they adopt stable coins, because if we are operating internationally and I'm a country and I'm operating with another country and we're exchanging money, all we're exchanging is really debt. All I'm exchanging is the trust that you will pay me in the future.
Absolutely.
So once you put a stable coin into effect, I'm not really relying on the country's resources or how much gold you have. Okay, the gold standard has been abandoned, but let's say how much reserves do you have, or how much trust I have in you, but how much trust I have in the stable coin. So that relationship will, well, I don't even know how that would work.
Yeah, but I guess we all find it as frustrating as I do. Every time you read a newspaper, it talks about digital currency, whether that's a private crypto, a stablecoin, anything else, it says that doesn't really exist apart from a bunch of sort of digital numbers, etc., etc. But fiat currencies don't exist apart from bits of printed paper. And when times get tough, governments just print money. At least with digital coins, you don't have that same sort of situation. So you could argue that digital coins are much, much better for the economy, safer than paper.
Well, correct. I mean, when I'm holding US dollars, or if I'm holding US dollars, all I'm holding is the trust that maybe the US government has a good army behind it, or maybe that they have good oil reserves. And this is, I'm not saying that this is the right way to go, or this is like an economic way, but this is the way we are used to now. So is the world ready to move to a gold standard, back to a gold standard, or before the Glass-Steagall Act for the banks as well, where things are done properly, where you have one unit of measurement and you have to have something to back it up, I'm not sure the world wants to go back to that standard, because most of the economies that we have right now, most of them are inflated. We are living in a big bubble. That's why the crypto industry is where it is right now.
So CBDCs will be inflated just the same way.
And what about exchange rates? So at the moment, exchange rates, supply, demand, one currency against another currency, that's just going to be the same with CBDCs?
Well, an exchange rate is basically how much money is in circulation, and not just that, it's about what the financial markets decide. It is still a demand and supply, and expectation as well by the traders. So I do not see much difference in the way the FX markets work as a speculator or an ex-trader to be able to influence the FX markets if CBDs were involved rather than traditional currencies. The only difference is that if CBDCs are in place, a government can move much quicker to reduce or increase the money supply.
Pavel?
Yeah, what I wanted to say is, it just came to my mind, and I never really thought about it, but once CBDCs become something that's in effect, and if there really are blockchains that are really open, then the governments of the world are going to start having the problems that decentralized blockchains have right now, which is bridging and interoperability. Like, what if I exchange the Indonesian currency here for Serbian currency where I am? Like, does this mean that I actually burn tokens here and print them somewhere else? How will this work? Who will manage these bridges? Will this be like an international corporation, or will it just be probably a big mess? So this is something that we are about to discover. But to just very quickly add on, I think that CBDCs are, first and foremost, were conceived as a reactionary type, as a reaction to essentially the crypto market. I think there was this idea that you will just have all of these stable coins and people will use them because they just believe that they work, even though they aren't really covered, or people just sort of believe they're covered. And that essentially lets you print money without a license. And this can potentially be dangerous for the sovereignty of your nation's money. And everything else is just a fight. Essentially, we're going to have the biggest fight for financial privacy in the history of the world in the next 10 years. So either we retain some financial privacy or all of it will be gone. This is the biggest danger, in my opinion, of CBDCs, because they can just be designed as a solution to something that seems like an urgent problem, and then it's like some of the coronavirus measures. So like privacy was never taken into account. And that's what I'm personally afraid of, that we will just have a system that fully accounts and fully tracks every cent of every dollar that you ever own.
Well, I'd like to share some information, like use cases in Korea, because the Korean people don't use cash anymore. Like, I can definitely tell you, like, I haven't seen Korean cash for like more than 6 months. No. I haven't even seen them. I don't know where they are. People are just only using a payment system with a credit card, and that's it. Probably 99% of the transactions are digitally made in Korea already. And then the government actually found out that all those big name companies, those credit card companies and the payment system companies, that you pointed out that they're actually taking all the data off of the people. And then, people actually worry about like CBDC and then taking control, like Big Brother thing and stuff like that. But like, in reality, those like credit card companies and payment system companies are taking all the data and they're actually controlling the social network. So like, in opposite, like government like have to do something about this thing. So in Korea, it's more like they have to do. Mm-hmm. It's not like they want to do or like maybe there's benefit or something. It's more like their mission to accomplish.
I think you're probably right in that most central banks see this as a space they've got to be doing something in rather than they want to be doing something in, but nevertheless there are a load of good opportunities if they're going to get involved and play. But you talked about cash and how little that is used nowadays. what we found around the world for the last couple of years of lockdowns and everything else was it telescoped many, many things. It telescoped the use of Zoom or video conferencing. It telescoped the use of cashless payments. Even the shops that were open in the UK had signs up saying not accepting cash because it was dirty. Everybody was touching it. So it's telescoped even the people that didn't particularly want to be moving over to paying with credit card or something simple. Not even talking about cryptos or stable coins, but it sort of moved that whole space. And I think the whole environment has just got quicker and quicker. And so as the private sector moves ever more quickly, the government sector is now sort of rushing along to try and play catch up. So I guess, well, maybe it's a question better left towards the end, but I'm going to ask it now anyway. So are we seeing CBDCs as a type of stablecoin, or are you seeing it as something quite separate? So we touched upon what a private stablecoin is. It's tethered to dollar or euro, and whilst this CBDCs won't fluctuate in the way that maybe Bitcoin or Ethereum does, nevertheless, it's not quite the same. So how are you guys viewing it? Do you see them as being very much in the same space, or actually operating their own little space?
Well, if I may, I'm just drawing on my experience from Malaysia, and they look at it as a more efficient way for international settlements. So which is why they are moving towards. They've not really adopted it yet, but they've done a POC to then say that the international settlements time, if you use CBDC and you settle within other countries, it's much more efficient and it's much more faster, right? From that perspective, I think that there is a use case. And Project Dunbar, by the way, is launched by Bank for International Settlements, and 4 countries were involved in that exploring multinational, multi-CBDC kind of a settlement. So Malaysia, Singapore, Australia, and South Africa were part of that consortium. And they recently just concluded, and they found that the use case is pretty real, and you can save a lot of time and money, by the way. So back to your previous question, right? Why would banks or central banks or monetary authorities would like to adopt it, right? Looking at that level, but if you then telescope it back down to a retail level, then yeah, the debate I think is out there, right? Do you want to have a CBDC rupiah, or you want to have a CBDC ringgit, or you would rather hold a USDT or a USDC, right? I'm not sure. Maybe sure. Pavel, Dave, and Alexander or Kim.
Obviously, there is a benefit what we're saying with regards to settlement, because when I send you a transfer from Malta to the UK, normal transfers are T+2. By the time the settlements are in place, you can receive it, but technically it's not settled. So there's always 2 days by the time money settles when I send it from me to you. So there's a very specific use case. And answering your very specific questions of stable coins versus the CBDC, it's a bit of a tricky question, because you're talking about issuing a national currency, but being stable. Stable against what? So we're not issuing dollars on the blockchain and pegging it to something else. So the only reason, the only value why we would call a CBDC a stable coin is if we go back to what we originally discussed. If we are willing to go back to pegging the value of our lira, value of our dollar or sterling, to something which has actually value. Let's say, for example, going back to the gold standard. This, we can then say that fiat went back to being stable. Otherwise, our currencies right now are not stable. Fiat is not stable.
No.
We adore too much fiat by saying we pegged USDT to the dollar, now it's stable. If we go back to fiat, I say we need to peg fiat to something that is tangible. And that is the only way I will bend over backwards and say fiat is stable, if we are willing to peg it to something of value. Otherwise, we're going to go to the same loop that we've been going over the last 5, 10, 15 years, printing money, and then trying to retract it further down the line. Don't get me wrong, we enjoy when governments print money, when there is recessions, because we make money. You know, I've been trading for 17 years, and when there's panic in the markets, we love it. But that shouldn't be the way things are done. So that's why I would suggest, if we're going to call a CBDC a stablecoin, we go back to pegging it to a unit of value, not to the government's trust.
Yeah, and we all know that's never going to happen. So
Not going to happen.
Pavel.
Well, what I wanted to say is, I believe that, speaking from like a Web3 perspective, I think Web3 is going to start eating CBDCs, not in the sense that it's going to displace them, and it's never going to displace CBDC money because people are used to think about pricing things in money, in, say, USD or a major currency or in their local currency. So in a lot of ways, you need something that looks like your local money to be able to use different financial applications. But I can see this as I can see CBDCs slowly displacing directly backed stable coins such as Tether, because you don't really need to trust Tether if you have the ultimate authority of your money that is issuing money. Backed stablecoins will endure in situations where they are incentivized. For example, Binance might incentivize people to hold BUSD for their own reasons, and people will hold BUSD because they trust Binance and because they are literally being paid to do so. However, I think that like the entire DeFi space is hungry for like real-world assets. Real-world assets such as money can come into these smart contract-based systems, and they can help stabilize and remove pressure and help grow the overall DeFi market. So I am pretty sure that there are already talks by big DAOs, such as MakerDAO, for example, to onboard like bank loans, collateralize them into like NFTs and buy them and put them in their treasuries. So this is just removes the intermediary and says, well, we got a bunch of cash just in case of an emergency, if there's some kind of liquidation crunch, if the price of the token suddenly drops, or if we just need cash on hand to buy something, you know, because we have to sell, say, ETH or Ever tokens. But we don't need to do that and disrupt the market. When we have literal cash on hand, we can go buy something as a DAO. So I think in that sense that CBDCs, if implemented the way I believe should be interpreted, which is like open and integrated worldwide, they will become a seamless part of Web3. And I think that's the best possible outcome, because then we have all these emergent situations, all these emergent plays, all these new startups and DAOs and things that can be experimented upon. So in a nutshell, this entire movement is expected, in my opinion, to displace these directly backed tokens, but they will still kind of live around if incentivized, and Web3 will definitely eat a lot of the CBDCs and put it into like existing blockchains.
Okay, and moving on if we can, because I'm very mindful of time, moving on a bit more away from the theoretical and looking more at the technical. So what about the actual implementing CBDCs on blockchain in both a developed financial market and in more of a frontier or emerging financial market? Are the differences between the two, and how do you go about it, and how easy or how difficult it is? Talk us through that a little bit. Maybe, Pavel, that's probably one for you to start with.
Okay, yeah, this is quite a different angle, but essentially the issue here is scale. So a CBDC cannot be built on a blockchain that has the same kind of consensus rules and is built to be massively redundant and massively distributed, mostly because theoretically the number of transactions you can have on a CBDC network can be in the millions per second. So I think that that CBDCs, as they scale, will probably use similar approaches that have been sort of researched by traditional decentralized blockchains, which is essentially modularity. Either that, or we will have like a very small set of authorities that run big, huge data centers like Visa does, and they will process an enormous number of transactions. Since this is essentially a system that looks like a blockchain and has interfaces like a blockchain, but is controlled by one entity, by one government, then it can be basically run on a server farm or a bunch of server farms. So in the end, if countries decide to distribute this network to citizens or private entities, then it will have to be modular in scope. Like it will have to settle through multiple layers. If, and this is more likely in the beginning, it still stays as a tightly controlled network, it will probably be run on a bunch of government data centers, and then it will not really have the same kind of scaling issues that blockchains have nowadays, because it is essentially just a big payment settlement network like banks use today.
Any other thoughts on that one?
The difference between CBDCs and stable coins is really easy. One is centralized as hell. So we should understand that that is not one government ever, as I know, plan to distribute their fiscal power between people, entities. So I tell you how it will be. Let's say United States start using CBDCs. When the use cases will be like, okay, we don't want oil companies to, develop new places to gather oil, climate change, all that stuff. Democrats tell that we want to prevent them, and if, like now they have to, talk to every bank, you shouldn't help them get funded, you shouldn't give them money. With CBDCs, they just press a button, and you can fund, let's say, oil, coal, whatever. And with, how the politics work, how the elections work, it could be really terrific. That's my opinion on that.
I usually like to boil down things very simply, as you're getting the gist. So all we're talking about really is centralized electronic money with a ledger. That's all we're talking about CBDC. So it needs to have two functions. One, this will operate in a very highly regulated environment with certain abilities to be able to change money in circulation. So right now, fiat are based on government intervention. If we need to intervene, there's always something available. So we need to leave that intervention in place. Otherwise, there's not going to be any uptake by any governments. And second, if we're going to design, say, for example, Ever to be a CBDC, to be a chain that runs a CBDC, we need to also keep in mind, once we design it around, say, for example, let's say the Maltese or the British government, that once we design it for this government, it is interoperable with other chains out there. So those two things might not go hand in hand, or when you program one, you might not think of the other. But if you don't think of both at the same time, then you're going to run into problems later down the line. And personally, I think that we're not going to live in a world where everyone is going to go to a round table and we're going to develop CBDCs that are interoperable. But we're going to get specific regions because of the geopolitical scenario that adopt their CBDC. For example, Russia, China, and the CIS region will develop their own. They come back together because they do not speak maybe to the Western countries. And we're going to get a hodgepodge of CBDCs that later down the line, we're going to have a problem to make interoperable between themselves. And obviously, I might be wrong, but this is my view of the world.
Well, I think back to Dave and Pavel's earlier point, right? CBDC is all about trust, right? And I think, and on your point, how do you implement it properly? I think it's got a lot to do with the oracles, the data that you integrate, right? Because ultimately, currency is decided, on interest rates, on inflation, and economists, makes those kind of complicated, so-called calculations, right, to estimate how much, a currency is worth, and then how do you, combat against inflation or deflation and all these other things, right? So if implemented properly, and I think CBDC could be much more efficient, because it's algorithmized, and also all the formulas are put in place properly. But like you say, do you have the necessary data or oracles to support that algorithm to again, back to your point, make it stable, right? So what is the definition of stable, by the way, right? So I think with those combination, and if implemented properly, it could be one of those better cases. And I don't think the difference is between a developed country versus a non-developed country. I think it's a battle of standards. Which standards or which protocols is going to be the most widely adopted protocol, right? And I think once that protocol is being taken by the governments, and then I think the interoperability then will be easier to solve because everybody's using similar protocols. And so you have similar level of trust if I know that you are using a certain formula to compute, right? The stability, right, of your currency, versus mine. If we're using different protocols or different standards or ways to stabilize our currencies, then that's where the trust is not there anymore, right?
Yeah.
And I think back to that question, right? I think
So I guess that whole question of interoperability and cooperation is core. And you have to ask yourself, what are the chances of that happening? But, globally, I mean, it's probably not, is it?
Well, again, back to Project Dunbar, right? So it's 4 countries coming together to test it out.
Exactly, but 4 countries, not
Yeah.
270 or
Indeed.
320,
Yeah,
or
I mean,
whatever the
pretty
number
much
is.
answered that. I think we're going to have a hodgepodge of different countries
Yeah.
or different regions coming together. But I think it's a pipe dream, and it's going to remain as a pipe dream for quite a long time.
Yes, unfortunately, we see now in the world is deglobalization. So supply chain destructions,
Yep.
everybody fights each other. Dollar become a little bit weaker every year. As you say, now they should rely on a currency that will be backed by real commodities like metal, oil, gold, something. And probably that will be the trend for next 10, 20 years. So we probably can't see the whole friendship CBDC for all countries, unfortunately.
Yeah. Okay, so just to wrap up then, I guess the bottom line question is, are CBDCs a good thing or a bad thing? Should we just work along the line again, as this is the last very brief comments and your thoughts on everything that we've discussed today? Pavel, let's start with you and work back in this direction again.
I think the CBDCs will simply be a thing, okay? It's like, as Oppenheimer said, you have the key and it opens the gates to heaven and the gates to hell. And we definitely have the technology to build it, and it can be used to bring some very interesting financial innovation. It can be like the gateway to UBI in certain countries. It can also be a nightmare for privacy. It can be used to exclude opinionated persons from the financial system and from the monetary system, which is a level above. So the fight is on us to try, and as a worldwide society, to try and make this into something that is good and accessible for everyone and interoperable. So that's the only thing that I think we can say, that the fight is on us.
Okay.
Yeah, I do agree with Pavel, by the way. Yeah, it's inevitable, right? So you can't resist it. Then it's up to us to make sure that it's being ushered or being pushed down the right path, right? Instead of just letting go wild and governments adopting subpar standards, into deploying their CBDCs. Right? So I think it's everybody's so-called effort and everybody's so-called responsibility to ensure that we will hold our governments accountable, when they deploy these sort of technologies, right? And not get so-called swayed by personal interest to then adopt a particular technology because I'm friends with them or whatever, right? So, yeah.
Bo, your thoughts?
Sure. Yeah. on the same page, of course. We don't know what's going to happen. All I do is try my best to make it better. That's all I can say. And then these guys covered pretty much everything, so
I'll define it as a one-liner. I think it's a Pandora's box with great possibilities.
Okay, I wrap it up like this way. I think the CBDCs is unfortunately another nail to a coffin of free markets, and certainly a threat to United States dollars. So it's like half-half.
Okay, and on that note, I guess, thank you very much, guys. A very interesting discussion. I hope everybody out there found it interesting also. And thank you for your time.
Thank you.
Thank you.
Okay, guys, so we have a little surprise for you. So we have two hidden videos after the titles. So please, let me show you 2 teasing videos.
Community. Become a member of a global community of like-minded individuals. Take the initiative and contribute to the development of a fast-growing network. Expertise. Share your skill and knowledge. Engage in governance processes and get rewarded for your contributions. Blockchain. Explore the possibilities of the fast, secure, and infinitely scalable Everscale blockchain, capable of handling millions of transactions per second. Everscale EverPoint Conference, Bali 2022, by Everscale.